Are you interested in how you can put your home equity to work in retirement, but also scared of the words reverse mortgage? Well, this video series is made for you. I'm going to walk you through the basics of the reverse mortgage step by step to help you make an informed decision about your financial future. And remember, always check with your family and a licensed financial professional before you make this or any other major financial decision. Now sit back and get ready to learn the truth about reverse. And hey, if this is your first time here, please like the video, subscribe to the channel, and tap the bell for notifications so that you can keep learning right along with us. Those over age 62 have amassed more than $13 trillion of home equity, and it largely sits idle during retirement. My name is Brian McRae, and I'm here to change that mindset because I've seen how profoundly my clients' lives can change when we put a well-designed reverse mortgage in place. Reverse mortgages aren't for everyone, but in the right circumstance, they can be an extraordinarily powerful financial tool that will help you thrive in retirement. In today's video, we're going to start to unpack the implications of long-term care and how home equity applies, and how the home equity conversion mortgage can be used to strategically position equity to help mitigate this long-term care risk. Now, the reality of the situation is most of my clients are either dealing with long-term care now or they have an impending long-term care event coming. And odds are the home is going to be used to finance long-term care in some capacity, whether it's going to be sold or whether we tap into the home equity conversion mortgage. 70% of us, that's 70% of us, will need some form of long-term care in retirement. That means most of us are going to face this problem. And what I've learned and what we all know about long-term care is that it's unpredictable. We don't know when, we don't know how much, and we don't know how long. And long-term care is just getting more and more expensive. Those of you that have long-term care policies, you know that your premiums have been going up, in some cases to the degree that they're unaffordable. And it's gotten to the point where the long-term care problem requires a multifaceted solution. And more often than not, my clients come to me and they're using home equity as a last resort. It's kind of the classical reverse mortgage sense, where this home equity conversion mortgage is designed to help you reposition equity, and in some cases take advantage of growth over time to help you reposition wealth to make it available for long-term care when you need it. Now, before we get started, I need to make something very clear. I am not a fiduciary. I'm not a financial advisor. I am not licensed in anything other than mortgage loan origination. I'm an expert in the home equity conversion mortgage. I'm an expert in understanding how home equity can be applied during retirement. But when we start talking about long-term care, that requires a very specific set of expertise. Now, I work with financial advisors. I work with these fiduciaries in tandem to help them understand how much home equity can be made available over time. But you need a licensed financial professional to help you with decisions like these, especially something as complicated and potentially expensive as long-term care coverage. The information I'm presenting to you today is based on interactions with my own clients and an understanding of how home equity can be positioned to help pay for this expense, perhaps offset some of the expense, or even backstop some of the long-term care programs you might put in place. So long-term care policies have become very expensive, and in some cases, they're not really feasible. And so one of the ways to look at using home equity is to use your home equity and use the line of credit growth feature. And what I mean by this is if you have a paid off home and you open up a home equity conversion mortgage, that gives you a line of credit, and the unused portion of that line of credit is going to grow at the interest rate of the loan, which means by putting this line of credit in place and not using it, you can earmark it for future plans, for future long-term care coverage. You'll be able to take advantage of that line of credit's growth over time. It's going to give you more wealth to work with down the road. And your financial advisor can use this wealth, this projected wealth, to help integrate that into the financial plan to determine what type and how much long-term care coverage might be needed. And remember, the home equity conversion mortgage function is to help you age in place. And so in a married couple situation especially, you have all of these guarantees and insurance that help you age in place. And when it comes time to think about long-term care, you have the flexibility of either bringing care into the home, or maybe it's one spouse and one spouse can move into care while the other spouse stays in the home and then has the flexibility to downsize when the other spouse is ready or when the other spouse moves into long-term care. And so I see this more often than not with my clients, especially when it comes with dementia, is that one spouse is typically dealing with some sort of dementia or some sort of impending long-term care need. And so being able to position this wealth to make it ready for that long-term care event is really critical to the overall financial plan. So the goal here is not to use the home equity conversion mortgage to spend your home equity. The goal is to use the home equity conversion mortgage to help position equity to offset and mitigate some of the long-term care risk. So when we talk about positioning equity, what we're talking about is the idea of moving home equity and making it available in the most advantageous place possible. So if you have that paid off home, using the home equity to take advantage of a line of credit growth feature is a great way to strategically plan for long-term care. Maybe you're one of the 60% of retirees who's still paying a traditional mortgage payment. And maybe this is the time where it makes sense to look at transferring to a home equity conversion mortgage where you can eliminate that principal and interest component of your payment, potentially saving thousands of dollars a month. And maybe that can help defray and offset some of the long-term care costs. And then finally, when you have this line of credit, you have a pool of liquid wealth at your disposal to actually use it to pay for care. Whether you're paying a caregiver coming into the home or paying a facility for a spouse, or even using it to pay for long-term care premiums in some cases. The idea is that you have this pool of wealth now available at your disposal and being able to use it and have it at the ready. Now, as I've mentioned before, once we have this home equity conversion mortgage in place, it's really important to understand how it works and understand the financial implications and work with a financial advisor to understand how best to integrate this home equity conversion mortgage into the rest of the retirement plan. Because that's where the benefits really start to multiply, is when you have a fiduciary who can advise you and guide you on the right solutions for long-term care coverage, alongside a smart, well-implemented home equity conversion mortgage. Another reason to think about being strategic and planning ahead with the home equity conversion mortgage is the prevalence of dementia. And so unfortunately, dementia is very common amongst most of my clients. And dementia presents problems when you are signing financial documents because you do have to be of sound mental capability to be able to do this. And so it's possible, and many spouses have a financial power of attorney, a completely legal document, but that can be tricky to use to qualify for a home equity conversion mortgage. It can be done, but it also requires additional documentation from doctors that may not be easy to find. And so better to have this in place, put it in place when both spouses have the same mental acuity, than to have to try to deal with it later when you have a power of attorney and a spouse that's already in memory. Now, I want to bring this back home to your own family and thinking about your parents or grandparents or aunts or uncles. The long-term care conversation can be really uncomfortable, and it's something that many of us want to avoid. But it does provide a unique way to connect at a very human level about something that is common, that most families are struggling with in some capacity. And so our ability to get ahead of it, our ability to talk about it with our loved ones and help map out the right financial future and help map out the right retirement future. And most importantly, map out what that forever home looks like. This enables us to get ahead of a long-term care problem and plan accordingly. And that's really what the home equity conversion mortgage is all about. This is not about reverse mortgages. It's about helping our loved ones reposition equity to have it at the ready and at its most advantageous place given their stage of retirement. Long-term care, we know, is a big part of that equation. And so having a plan in place and having the best utilization for that home equity is a critical part of the overall retirement plan. This is such an important issue to my clients, and so many of them are dealing with it, that long-term care is going to be a very common topic of conversation here at The Truth About Reverse. We're just scratching the surface. So we'll come back to this in future videos, but for now, I want you to stay tuned as we start to delve into the financial advisor world and talk about how the home equity conversion mortgage can be integrated into a retirement savings or a retirement income plan. Until next time, keep on learning the truth about reverse.